Today is Friday, November 8th, 2019. And what I'm going to be talking to you about today is the VA one-time close construction to perm loan. And I'd say probably the biggest thing that we get on the VA one-time close loan, nobody really understands or even knows that it exists, or very few people do. So when people are searching out there, only a couple of companies do these right now. I'm sure it'll probably gain in popularity as we have more active duty military members and veterans coming into the community and wanting to buy homes. And, if housing prices continue to push up, really the only, not the only, but one of the best ways to do that is to, buy a vacant piece of land and build a home. Now, there are some nuances to the VA one time closed construction loan that it would be good for you to know about. So first of all, the big thing on the VA construction loan is that your builder has to be approved by VA. That's not a big deal. It's very easy to do. Right now, turn times for builder approval, it's about a week. They just go online and register. People think that being VA approved is the same as getting approved with whoever the lender is going to be. And it's a little bit different. So the VA doesn't vet your builder. They don't make sure that they have the history of building homes, that they're carrying the appropriate insurances, etc. That's really up to the lender or the investor who will be advancing construction funds, and obviously it's you and your due diligence as well. So you have to get your builder approved. And there, if you go on the VA's website, you can search for eligible builders already. And you can search by zip, you can search by town, builder name. So very good tool on the VA website. If not, if they are not approved, then your builder can sign up and get a VA builder ID. It's very easy. So that's the number one big deal with the VA loan. The VA one-time close is similar to the FHA, USDA, and conventional one-time close, where the borrower cannot act as the builder. So there's no self-help allowed on this program. Very similar to the FHA, OTC as well. So they don't want you to hire a family member as the builder. They don't want a direct relationship at all between the builder and the homeowner. Excuse me. So what does that mean exactly? Well, it just means that you got to have a builder that's not affiliated with you. That's all. Right now, currently, maximum lending limit on the VA jumbo loan is $1.5 million. That's not to say that there are not other options out there, but currently most investors are sticking to the $1.5 million. Come January 1st, 2020, supposedly the VA lending limits will be removed and there won't be any VA jumbo loan product distinction. So currently, right now, the way that it works is you can do a VA loan and you can go beyond the VA lending limit in the county. And the lending limits hold true to the FHFA lending limits. So for instance, if the lending limit in your county is $500,000 and you're looking to build a $1 million home, that's the total job cost, then you would need to come up with a 25% down payment on the difference of the VA lending limit, $500,000, and whatever your loan amount or the total job cost is going to be. So in this instance, it would be $500,000 difference, and you would need to come up with a 25% down payment in order to get a VA loan. And so it's very straightforward, simple process. So those are some of the nuances with the VA one-time close construction loan that's different to FHA. One other item actually before I complete is that the interest payments on the VA loan have to be made during construction. So what that means is that like the FHA one-time close, you can finance in the interim interest during course of construction. With this product, you cannot finance the interim interest. So that means that as you progress through the build process and you're taking draws, you're going to have an interest carry on the money that's borrowed, and there's a calculation that they run. So every month you're going to make a payment. Now it's an interest-only payment. However, it's a payment nonetheless, and so you need to be prepared for that. If you rent currently, they will not make you qualify for the loan with the rent and the interest only payment or the payment on the construction funds. They'll just make you qualify one time for the final loan amount. But if you own a home and you're building a new home and you're using the VA one time close, they will make you qualify using both payments. So that's something to consider and be aware of up front. So that's very important. Another thing with the VA one time close construction loan, they typically want to see it in 12 months. If you're in a weather affected area, they may go out as long as 18 months. But I would say that you probably want to plan 12 months or less. So if you are going to be in a time where you're going to have weather hitting, you'll want to time it so that any exterior work is complete and buttoned up, and then your builder can move to the interior of the home during the winter months where it's just not going to be possible for you to be doing anything on the exterior of the home. You have to have a certificate of eligibility, so just like any VA loan, you have to be eligible for VA guidelines, and then we would look at your credit, your income, similar to what we talked about in the one-time close basics video. Again, if you have any questions, please feel free to call us. Our number's at the bottom. You can shoot us an email anytime. We look forward to meeting you. Thanks again.